Welcome, everybody.
Well, good morning, everyone.
Glad you joined us this morning for our Daniel Krug and Associates Wealth Management Review for November 19th, 2020. Today's presentation is titled Short-Term Pain versus Long-Term Gain. My name is Rocky Istvan. I'm the Chief Compliance Officer and Associate Wealth Manager at Daniel Krug and Associates. Daniel Krug will be joining me in just a few minutes to help out with the presentation. Dan is the CEO and Senior Wealth Manager at Daniel Krug and Associates. But before we get started, a reminder that this presentation is for informational and illustrative purposes only. We're looking at a little over 30 minutes for the presentation. We are recording this session for review later. It will be published later. Everyone will be muted on the call. However, you can use the chat room to ask any questions, and we'll be monitoring the chat room, or to just say hi to us and let us know you're out there. We want to thank CNR and the Capital Group for their contributions in today's data presentation. So just a reminder of what wealth management means to us. Your overall investment strategy is the foundation of what we do. Where we find our expertise is in the advanced planning strategies, things like wealth enhancement, and you can see the different subcategories there: wealth transfer strategies, wealth protection strategies, and charitable giving strategies. So many things that we do to enhance your wealth over your lifetime. We're going to get into the agenda here. Today we're going to be covering major developments this week, an update on COVID, talk a little bit about where the markets and the economy is at, giving you an overview of portfolio development process, how we work with our portfolio managers, and then concluding with opportunities and strategies update at the end. We will have time for Q&A, and we will check and monitor the chat room for those. At this point, we're going to stop the presentation just for a second, and we're going to hop on the camera here to say hi. Good morning, everybody. Wanted you to know we're broadcasting from the office. Some of you have seen it, some have not. So welcome. We're looking forward to you guys coming in. And Dan, any comments?
Absolutely. This is the first one we're actually doing from the office that's live on our webinar jam. And we're actually really excited about this. Yesterday, was it yesterday or the day before, when we had the Shred Day, we had multiple people come into the office. It was so great to see everybody. We've been kind of starving for seeing you guys. We just haven't been able to, we haven't been able to get our hugs in. So, we're looking forward for this whole crisis to be over, which hopefully, based on the information we're going to be presenting today, you'll see that there might be some light at the end of the tunnel. And it is the opening to the tunnel, so not a train or anything. So I think there's going to be some great stuff coming down the pipe here. So, Rock, you want to go ahead?
So major developments that have happened since the last time we updated you on our webinar. The vaccine breakthrough, big news is that we're seeing a lot of positive results from the big firms that are out there developing the vaccine, all with their little different strategies and approaches to it. But it seems like we're getting a high success rate, over 90% effective from most of the companies. So that's a good sign. And obviously the economy and the markets are kind of depending on that vaccine coming in to end the pandemic. The next few months of economic growth are likely to moderate, though, because of the increase we're seeing in the short term here. But we still believe in a very strong second half of 2021. So the outlook is still looking good for next year. We're going to go into a little bit more detail on that. Stocks have rallied recently due to the discussion, and the timeline for the vaccine is being really accelerated. So that's positive news for the market. The 2021 earnings are projected to be a good 10%, plus or minus a little bit there, higher than all-time earnings highs. So a lot of positive things that we're seeing for the economy going into next year and through next year. However, valuations of equities are currently high and are likely to remain so, but there is going to be strong earnings along with very, very low interest rates, which bodes well for stocks. The job market we see continuing improving. However, it is choppy as right now we're going through some slowdowns because of new restrictions being put in place. We're going to touch on that a little bit on the COVID update. We see a couple million jobs being generated next year, so that's an improvement. The stimulus talks, though, have been stalled. A lot of uncertainty around there, and we believe that it's actually needed with what's going on with this increase in the COVID cases going into the fall. And like I said, we'll touch on that a little bit more as we go on. Monetary and fiscal policy decisions remain dominant forces to the economic activity. The Fed is continuing to pump capital into the markets. What we need is the stimulus on the other end for the consumers to be able to participate in that and continue their spending. We're going to touch on that in a minute. COVID cases continue, as I've said, to rise. They're at high levels in the US and Europe. And also hospitalizations and fatalities are rising as well. So the next few months continue to look to be challenging from economy and global response to COVID moving forward.